Markets around the world are making new all-time highs, but the biggest one is yet to do so. So what does that mean for 2024 and which stocks are poised for the biggest breakouts? Today we'll talk about the data that's underlying this rally, why the Santa Claus rally could be the most important thing for January, and if the Grinch comes, what happens to this market? We'll also be talking about rotation is the key into 2024 and why this chart might just be showing us that a breakout is just beginning. Well, welcome back everyone to the Daily Show where we're talking about stocks, commodities, and cryptos. My name's Tom, and I thought I'd start off by just wishing everybody a very happy new year, and I hope you had a Merry Christmas if you celebrate it with your family and friends. Now let's get into the macro and the data though, because of course there are so many things to discuss. Extreme greed coming into the end of 23 in terms of these sentiment indicators has us very cautious, but do we have a turning point? Later on today's show, we'll talk about that to do with stocks and, of course, the commodities out there. I also want to remind everybody that 2024 is soon upon us, so that means that you should sign up for our VIP free weekly newsletter. Why? Because we've got some amazing data and stats coming your way in 24, and I think for free, it's going to be a big one. Let's also discuss median stock return versus the S&P 500. A lot of people have been messaging me saying, I missed out on the rally, there's no opportunity. Look, on this channel, we come from that idea of abundance. We always see new opportunities, and there's always rotation going on in the back of the market. But I thought this was one of the best charts of 23 because what it shows you is two things, one very scary and one very cool. The first one is median stock return versus the S&P 500 return is actually quite bad. It's pretty behind. And what that's telling you is that the big stocks are leading the charge and the smaller stocks have not been coming along with that. If the market continues to broaden and breadth continues to improve, which we've got some data later on today about, then we might see an improvement here. But of course, the bears, you guys are going to be looking at this and saying, look, it looks just like 98, 99 again, with valuations out of control and just a few leaders. It is different from that time from the perspective of the companies that are leading are much better than what they were in 1998 and 1999. Here's what I'm getting to though when it comes to rotation, because this chart might be a little bit hard to see. I posted it over on our X account, links in the description down below, and it shows you here that the S&P 500 600 small cap pure value has actually performed the best since the October 27 turn. So rotation is now number one over the mega caps in this current rally. And I think that probably doesn't surprise anyone that's been watching this channel now for quite a while, but it's something we've been talking about. Another thing that's really interesting here is to see the difference between consumer discretionary, cyclicals, and defensives. Now, cyclicals are energy, materials, industrials, financials, and real estate. And you'll notice, thanks to probably a little bit on energy, we've seen a huge net trading flow towards the negative side here on the cyclicals. Now, defensives have actually seen a little bit of an uptick recently, though it hasn't shown into price yet. So we'll be looking for that because, of course, we have no rotation currently into consumer staples and utilities and just a little bit into healthcare. So healthcare is probably where the upticks happen, but that's one of the stories you'll be looking at in 2024. The rotation potentially into staples and utilities, the two most hated sectors of really this year so far. Financial conditions today are easier than when the Fed started raising rates. So you might say, well, it's really hard because of high interest rates. Well, it turns out it's not as difficult as you might think. Here's a chart by Bloomberg of the United States Financial Conditions Index, and it actually made a new high. So it shows you that really that whole tapering concept is over. And we've already represented this by, of course, tracking all of the central bank data and bringing it to you on a chart, which we've got coming up later on today's show, which shows us that actually a little bit's been pulled away over the last week. Here's a great stat coming in for the dollar composite. Now, this tells us that really, if you're a US dollar bull, you probably shouldn't be based on the statistics. These are the other reads, and of course, it shows us that this week is most likely going to be a negative week. And have a look at this, the last day of the year, only 2 bullish in similar situations and 20 bearish. That's an interesting one when it comes to the last trading week and what we're seeing in terms of the stats. Here's one with the Santa Claus rally. Now, you might be saying, but Tom, you've already talked about the Santa Claus rally and you talked about the 5 days leading into Christmas. Yeah, this is where people get confused. There's 2 Santa Claus rallies. You might think, well, how can there be 2? A lot of people believe that the Santa Claus rally actually happens after Christmas and then goes into the first couple of trading days of the year. So it's usually the first two of the new year. Now, in the Santa Claus rally, we kind of actually want it to be negative. And now this is similar to the Grinch reading, which we'll be looking at later on. Notice here, when Santa Claus rally percentage change is negative, the New Year percentage change is actually up a decent amount. In fact, it's up about 5% on average. But there are some nasty ones here, 2008 noticeably, and of course 2000 as well. But in general, it's mostly a positive kind of period. So Santa Claus rally is one of the things here and something we'll be looking at. And it's just another one of the rally stats that happens usually during December and January and generally sets the tone for how we're going to trade the rest of the year. You'd be surprised how good it is. So a lot of people are probably wondering, how can we be up 8 weeks in a row and not go down once? Well, yeah, the stats are pretty rare. We're actually in 20 reads now over the last kind of 70 plus years, and that's not many. So we're in historical, anomalies, I guess you would say, in the markets. And you'll notice here that the first week and the second week return actually have a slight negative tinge to them, but then over the next 12 weeks still has a positive tinge to it. So just because it's been up for 8 weeks and you think, wow, this market's overbought, I've got to sell it, it would generally mean that if it's going to sell, it generally sells over this 2-week period, just a little bit, or goes sideways, and then it comes in strong for the first kind of part of the new year. But this is another reason why people are really feeling how strong they are in the markets, and it's got to do with, of course, the breadth. So let's take a look here. The breadth has hit a new high in terms of S&P 500 industries at 52-week highs. That's a huge positive for markets. Now, this is the type of stat that you want to see if you're a bull, and I've got some other good bull stats here, but I've also got this one to bring you up, which is election year seasonality. So what do we expect for 2024? Well, in general, this is pretty clear. Over the last 70 plus years, we've generally seen sideways action for the first beginning of the year. Then we get this seasonal pullback that tends to happen during these election years. Now, this is the one that I think everybody's going to be focused on. We'll be looking for put-call ratio. We'll be looking for an overly extended market. Maybe it's going to be a little bit higher. Maybe it keeps driving into this melt-up. And then there should be a pullback somewhere around that February, I would say, to March period. That's usually where you tend to see it. And a lot of you in the comment section have been echoing a March sentiment. So therefore, I'm going to go slightly earlier than a lot of you guys and say it could be Feb. We'll find out. Of course, on this channel, we talk about patience, react, don't predict. And that means that we'll be patient enough to look for the trigger signs, to look for the reasonings that it could actually be going down. That's what's helped us a lot recently, where we've been looking for it, we just haven't seen it yet. Percentage of S&P 1500 stocks above their 50-day moving average just hit 90%. That's pretty significant. All but 2 sectors have almost 90% of their stocks in uptrends. Let's just say that's pretty significant. And it brings us to SPY breadth as well, being incredibly high here at this stage. So what does that mean for 2024 stats in the bulls? Well, it's another pretty good bull rating. And generally speaking, it means by the end of 2024, 1 year later, we really should be 98% of the time bullish. So that's pretty bullish. Now, of course, stats are stats. They could be broken. But I'm going to tell you right now, that is a pretty big stat that's coming out considering all those breadth readings. So pullbacks may be short-lived, though I believe 2024 is going to bring a lot of volatility. Now, why could it be volatile? Well, year 3 of presidential election kind of cycles, usually we've never seen a recession. In fact, we still have never seen one. But year 4, which is the fourth year we're coming into right now, we've seen 5. So it's the second highest of all of the, let's say, the recessions that have happened. And we tend to see recessions usually around year 4 or year 1. So that means the next 2 years could be a little bit dangerous from at least that statistical average. Now, we talked about the Grinch. We haven't seen the Grinch yet. I will alert you if we have got the Grinch. Basically, the Grinch is similar to that Santa Claus rally. If we end up getting a negative Grinch, which is a negative plus 3 days coming into Christmas, 3 days coming to Christmas plus 3 after. If we end up going negative there, we have really good Januaries historically, and we have pretty good years. But if we have sometimes a positive Grinch, which is where the Santa Claus rally comes in really hard, then that can lead into some of the worst double-digit losses that we've seen over the last 70 years. So again, something that we'll be looking at. Statistics are good to bring together with some of the evidence. What about the Bank of America private client equity? What are they doing? Well, they've started buying back into the markets, but they're still not super heavy. And you can see here they've started reducing their cash positions. Late as always, sometimes you would say, when it comes to these private equity holdings. Not much to go off here, but it does show you that some of the funds are being allocated back into the market, especially scared probably to miss some of these rallies. The Big Seven also failed to make its double top. So you can see here, this is the Big Seven tech stocks as a share of US single stock net exposure. So that's actually picked back up after going back down to the lows. And this is from Goldman Sachs. So another interesting one, just showing you that everything's sustaining itself at this point. Dividend ETF growth. Now, this is interesting. This is for dividend-focused stocks. 2023 was one of the worst investment years ever for dividend-focused ETFs. 1.5 billion this year, one of the lowest hauls on record. So nobody wants to buy div stocks, and it's probably shown in a bit of the results as well. What direction do most retail traders out there think, and most retail investors think at the moment? It is generally bullish, but of course we have also seen a huge short sell. We will bring you options updates when we get them. A lot of the software, and of course we're on holidays here a little bit, is maybe a little bit out of date. So when we get the updates, we'll bring you the options, and that will really flow into, I think, the end of the year. We'll have to give you an update in the next video so that we make sure that we're ready for one of the bigger options expirations, which is going to be the end of this year, because that's when you see tons of options and tons of weird stuff in the low volume, pretty high volatility sometimes markets. What about Nike? Nike has a weird transaction on it that you can see happen just before it sold off. And this has been a stock that I've liked for quite some time. It's been rallying, and it hit into a really nice kind of supply level. And then, of course, at this stage, it's got a big transaction. Now, it's gone into where you would find buyers generally again, but just shows you time and time again, it's good to see where the flow's going. And when these big transactions come in, you have to be, considering it and thinking about it. What were the best sectors for the trade on Boxing Day? Well, it turns out that we had clean energy, we had solar, we had regional banks, and we had semiconductors. Also bio up there, and one of our favorites recently, which has been energy stocks. So energy stocks came out with a nice little bang, 0.86 up, and of course oil's doing really well, which is what we've been discussing here for the last 2 weeks on the channel, and it's really been showing that it's doing well. Speaking of rotation, no signs of pullbacks yet, guys. From the defensive side, we just haven't seen any defensives go. Staples, 0.11. Utilities, down over 5 days. And of course, all of those risk-on style stocks, biotech, regional banks, clean energy, solar, continue to be some of the best rotations. And it's pretty much what we've been talking about. Options market, incredibly slow. You can see here, no really huge transactions across the board. There were a couple, but it's pretty slow going when it comes to options, new transactions. Look at this, 26.7 versus 39.5. 58% calls though, so still a lot of call buying, and retail made up 31% of the spread, so of the single leg. So that's quite a lot. Let's jump into the charts now and talk about everything to do with the biggest lead indicators. Then we'll get into the hottest key levels. First up, S&P 500. Have a look at this one. This is something that we haven't seen in a while, a huge drop off in liquidity. So as we reach this close to new all-time peak high for the S&P, we're actually seeing both the US liquidity and the worldwide liquidity drop off a little bit. Now, that's telling you maybe it's not as supportive of a bull market. Too early to tell completely though what's going on. What about yields? I think this will be something you want to be watching. We've already speculated on that idea of 3.7 to 3.8 being a very key zone in the future. US yields have dropped off a cliff after everybody's decided that the Fed is going to cut a bazillion times. I think it's 6 times now in 2024 expected. And this will be an area where I could see yields actually pick back up. So remember, if the US stock market starts to make a new high, it starts to then turn around, and at the same time you're seeing yields bounce back up, they can go in harmony. So maybe if yields start spiking, they spike for a couple of days, market's going strong, then market gives you weakness, that could be a clear sign that there's some weakness coming back into the market. We just don't have that yet. Treasuries is also still at our resistance or our supply zone, and we know there's tons of transactions through here. So of course that's conducive as well. If yields go down just a little bit more, then they start to spike back up. That may push down treasuries. And look, treasuries have been one of the best trades over the last couple of months. And I can't think of another time where treasuries have been really one of the best trades in terms of the bull side. It's been a while. Treasuries are not really trade objects. They're more investments. Home builders, still pretty good, becoming very dull. You can see here, it just made a new high, but it hasn't really broken out or anything. One to watch, of course, we'll be watching home builders and transportations. What about Dr. Copper? What's Copper doing? No breakout, no high. So I keep getting alert sets here, but I don't get the closes I want. So 3.95, still an area for copper. And if copper breaks out, I think that could be really strong for overall the stock market. So something we'll be looking at and we'll be following. Copper not coming with the trend just yet. Now, we also want to talk commodities because I've noticed that we've gapped down here on DBC, which is the commodities, one of the commodity index tracking funds. And you can see that we're finding ourselves at a critical level of support. So this is kind of going into that idea that oil might be maintaining. And imagine if this thing comes out of the gates really strongly after coming down here and building that base. I think that this could be an island reversal in the happening and something that also people may want to look at. Could we see reinflation? Could we see a problem now that the Fed's like, oh, it's okay, we're doing this? Some charts are starting to suggest that, and I think it's worthwhile watching commodities into 24. Let's talk about US dollar. As we mentioned, probably go to weaken further. I've got one level here, 161, or parity in general, which is 100. So really, it looks like the US dollar is continuing to weaken. We've seen some signs of strength before, but never enough to really say the swing is on. So at this point, it's still weakness on the dollar. And take a look at that weekly close. It's really bad when you put it on the chart. Nothing good happening here on the weekly. Look at that, really, really, really negative overall. US oil, now this one's been pretty good and it got so close to my heavily traded zone. We traded to 76 a barrel. I obviously wanted this thing to about 76.50 a barrel. Really strong move. Actually a pretty nice daily close. I could see even further strength from oil and pickups coming off the shorts. I probably want to see it hold somewhere around that 73 to 73.30 zone in terms of buyers. And it just got above the daily 20 moving average, which may not seem like much, but it's been a while since it's been above there. You can see it's kind of rejected or stopped at those levels, found some problems, found some base support here, and then it's bouncing up. So yeah, a key level and certainly something I'm watching. Now, gold did a really good thing. We talked about 2070, 2075 in our last video. We hit 2070, and I actually think 2070 is the right level for it. So I feel like that was a really good breakout. We ended up getting into the strength that we wanted. It could go 75, it's possible. Gold, of course, after we kind of said it would go up, down, and all around from that point for a month, has so far done that. I could see sellers being here, but there's no signs of them really triggering a sell yet. I'd like to see a new high, maybe hit 2075, then sell off, then go underneath this level, and then we can talk about maybe further weakness. At this stage, it's in a little bit of an uptrend on the smaller time frames, but I think it's in the critical resistance zone. What do you guys think in the comments down below? We've also got another one, a key stock that is really boring at the moment, and I'm sure is frustrating a lot of people, and that's Tesla. No breakout still. Looking for a 259.70 plus breakout to give us maybe a 275 run. And at this stage, we know there's a lot of trades that have gone through here on Tesla. Take a look at this weekly. It's not really giving us any particular signs of significant weakness. So I think that with Tesla, that's something that we are looking for. And you can see here, sorry about the load there, the long leg doji, and it's just kind of indecision. So what that's telling us is that we don't really know where the market wants to go next yet, but we'd like to see a break of either side. I'd also set an alert below the low there because I think the break here could be very, very important for Tesla, especially momentum traders. I'd like to see the upside because I think that will be more aggressive due to retail traders getting in on this, but something we will be watching on the charts. Let's move over here to energy stocks. Now, energy stocks have been performing okay since we talked about them back in the middle of December. Of course, there's been better than energy stocks, but energy stocks have been all right. And we've had here no breakout in terms of a close. So you can see here long leg doji. I think oil might be performing well enough to maybe push this through. but something that's important, because if it goes from here, it could go to the next resistance, which is about 87.58. And energy is still an underperforming sector, so one that we're watching. Now let's move over to the indices, and we'll just cover a few here today. First up, US 2K still looks really strong. I don't see anything stopping it just yet. At this stage, when we broke out and we had that really nice weekly close, which I mentioned would be key. I knew I didn't actually get to the video, so I apologize for that. But, sometimes family does come first, guys. And it is the Christmas cheer, yeah? And then we had here the 2030, and you can see that this was a huge close because it really confirms in many ways that the market is trying to get to that next level. Now, I've estimated the next level could be between 2090 and 21 kind of 30-ish zone, and it looks like it's well on the way there. So the Russell 2000 is starting to perform, and it brings us back to that chart we had at the start of today's video, which is also the thumbnail. And what this is showing you here is it's showing you a breakout. So this level is the IWM, the Russell 2000 versus the S&P. And it's showing you that at the moment, the Russell 2000 has been such a poor performer. But in 2024, it could start to improve really, really strongly. And it may have some nice moves in it as a ratio because, of course, this is such a critical level. So we're almost at that resistance. Russell 2K, I expect to go a little bit better. But in terms of significant outperformance of the Russell, I'd like to see it above this 0.43. And we'll be, of course, tracking that. So make sure to subscribe, because this will be a key chart that we'll be watching quite a lot in the year to come. Now, NASDAQ, what's going on there? Well, it's still breaking up. Do we have any weakness signs? No. It hasn't shown any weakness yet. It's been so many weeks in front and just going bullish and bullish and bullish. But yeah, unfortunately, no changes there to the NASDAQ. You can see just continuing to push higher. It's dull. It's hard to short. Maybe you know something I don't know if you're finding some key level here, but I haven't seen anything yet. Same goes for the S&P. You can see this is at the critical zone that we have a key alert on, but not really too much shortness happening here. So, of course, this is that watch reaction level. And if you have a look at the smaller time frame charts, when you look at it, does it have any structure that shows you, wow, I want to be super short this? We did get that sell, but as we warned last week, it didn't go far enough down. So we didn't get underneath these lows. This 46.97 was looking like it was going to hold up. It has made a slight new high. Some shorters might say to, try to time a double top or something, but I think it's too early to tell that. It's at a key level. If you had looked at that key level last week and just randomly shorted it, you would have done pretty well initially. But yeah, that's really where it's at. Just a key level, still dull, still really difficult to short off of those zones. Now let's move to Bitcoin. So Bitcoin's an interesting one because it keeps trying to break out and go towards that 46.48 that we've talked about. But have a look here at the weekly or the daily 20. Look at this thing. 1, 2, 3, 4, 5, 6, 7. Now, notably, it hasn't made a new higher high. So I think that's pretty important when it comes to Bitcoin. It looks like it could be a double top, and maybe it will weaken off, but we don't know it yet. And I think the 20 moving average might be one of the keys. So something to be watching. At this stage, the trend's still up, and it still could be on track for that 46 to 48K range. When you're looking at news, is there anything for the week ahead? Not really. Very basic news. This is that time where it's more illiquid. Sometimes spreads get out. If you trade exotic pairs, such as some weird currencies, I'd be very cautious about entering in, guys. In my experience, the best thing to do is generally to stick with the more liquid, high quality pairs, because sometimes the spreads just get so wide they can bash you around. If you have a story about that, let us know in the comments down below. Maybe I'll bring them up for the next video because they can be great learning experiences for so many people in the community. Thanks so much again for making 2023 amazing for us here at FX Evolution. I want to thank each and every one of you that have subscribed, liked the videos, and of course commented down below, joined in on our community, or of course joined in on live streams. We've got big plans for 24, so thanks to you, and we'll see you in the next video. Bye for now.